the European Central Bank is pushing back against proposals to expand euro stablecoin adoption, citing concerns over banking stability and traditional lending. The ECB's resistance has emerged as a key development in the ongoing debate over digital currencies in Europe. At the heart of the issue is whether the region should loosen rules to compete with dollar-backed stablecoins that dominate global markets. The resistance came to light during high-level meetings in Cyprus this week, where officials debated the implications of expanding euro stablecoin usage. The ECB's position reflects a broader tension between innovation and stability in the financial sector. The debate was triggered by a proposal from the Brussels-based think tank Bruegel, which argued that Europe risks falling behind in the digital payments race if it doesn't support euro stablecoin growth. Bruegel recommended easing liquidity rules for stablecoin issuers and granting them access to ECB funding support. The think tank emphasized that without stronger euro stablecoin adoption, Europe could lose influence in the growing digital payments sector. European transaction activity in stablecoins is already significant, accounting for 38% of global volume. Yet euro-denominated stablecoins still represent only 0.3% of the total market supply worldwide. The ECB's resistance is: most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Led by President Christine Lagarde, who has voiced strong concerns about the risks of large-scale stablecoin adoption. Lagarde warned that widespread use of euro stablecoins could pressure traditional banks by reducing deposit stability. This concern stems from the idea that if individuals and businesses shift funds into stablecoins instead of traditional bank accounts, it could undermine the lending function of banks. The ECB's stance is that private issuance of euro stablecoins could introduce systemic risks that are difficult to manage within current regulatory frameworks. At the same time, Europe's stablecoin market is dominated by dollar-backed options. The largest euro stablecoin available today is EURC, issued by Circle. Despite the dominance of dollar-backed stablecoins, the ECB has not shown interest in endorsing private euro stablecoin issuance. Instead, Lagarde has pushed for central bank infrastructure solutions, such as a digital euro, to maintain control over monetary policy and financial stability. This approach reflects a preference for central oversight rather than allowing private entities to issue stablecoins backed by euros. The resistance from the ECB contrasts with a push for relaxed rules from groups like Bruegel. These groups argue that the current regulatory framework is too restrictive and hinders Europe's ability to compete with the US and other regions where dollar-backed stablecoins thrive. The debate is not just about market share, but also about the broader implications for financial sovereignty and monetary policy. If Europe continues to lag in stablecoin adoption, it could lose ground in shaping the future of digital payments. The stakes are high for both financial institutions and consumers. If stablecoins grow unchecked, they could disrupt traditional banking models and shift financial intermediation away from regulated institutions. On the other hand, if Europe tightens its stance, it could miss out on opportunities in the digital economy. The ECB's most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Position highlights the tension between innovation and stability, a recurring theme in the evolution of financial systems. The next signal to watch is whether the ECB will soften its stance in the coming months. The push from think tanks and the growing influence of dollar-backed stablecoins could pressure policymakers to reconsider. If the ECB does not adapt, Europe could face a growing imbalance in the stablecoin market, with the US and other regions gaining more control over digital payment infrastructure. The outcome of this debate will shape the future of stablecoin adoption in Europe and could influence global financial dynamics.